Me and you have spoken before.
Have we?
Maybe. Did you reach out about a home loan?
Yes, multiple times with other, not only for clients, but myself as well.
Okay, I need to go back. I'll check my notes for sure. But the name
Okay.
sounds familiar.
Okay, yeah.
Wait, you don't work at Cheesecake Factory, do you?
Oh no, that was Karina.
No.
Oh, that's Karina. Okay, gotcha.
Karina.
Yeah.
The Cortez is what was thinking them together.
Yeah.
No worries.
You're already recording.
Yeah, I mean I started a little early. But all right, well, then we'll get started. Today is the 3rd of August, and we're enjoying the weather outside today. But today we have a special guest, Mr. Dani Rudd from Legacy Mutual. He's been working with us for, 4 or 5 years now, Donnie? Has always been our go-to specialist for any marketing and mortgage questions. I mean, he's a guru of knowledge. He's been with us previously at CTR, was on a lot of these calls as well. So if you guys remember him, here he is again, and we love having him on. So today he's going to talk about kind of the lending process. I know some of you newer agents just need a little bit more help on what to expect from your lenders, how do we help our lenders best, and how to interpret what they're telling us so that we can then correlate it back to our clients, and we're giving good solid information on timing and as well as the process to everybody, as well as the other side of the transaction, right? Everybody's, hey, what's going on with lenders? Most agents, I don't know, they told me this, what's that? I really don't know. So this is to kind of put a little bit more light on what our guys on the back end kind of do, and for you guys to understand that process just a little bit more so that you can guide everybody, the listing agent as well as the clients, better along that process. So Donnie, I'll let you kind of take it away and do what you do.
Awesome, man. I appreciate it. And I know this is recorded for most people, but I'll kind of share with you why we're doing this. I had to proactively reach out to Alan because I heard he was making some transitions. He's always been very sharp, very cutting edge as far as moving forward. So I'm going to be in this lending business for 20 years chasing Alan. So wherever he's going, I want to be a part of the team and help out in any way that we can. That's the reason why we're doing this class. And just like he said, he kind of covered the meat and potatoes of what we're going to be going over. So to jump right into it, I'll tell you guys, there's really 3 categories that we look at as lenders to help clients in getting qualified. The first is going to be income, right? We're making sure that things are stable and predictable as far as moving forward. So that's where everyone always has that kind of confusion. They're like, hey, they've been in the business for 2 years. They should easily qualify. It's like, yes, they have a great 2-year history, but we're trying to look 3 years actually from the date of closing to make sure that they're still going to have a sustainable income to make the mortgage payments, right? So that's category number 1. Category number 2 is just making sure that somebody meets the minimum requirements as far as credit. And then lastly, we need to figure out and make sure that they have access to assets. And assets is used for the down payment, the closing costs, and those things. That can come from either their personal savings, down payment assistance programs, or even a gift from family, right? So there's a lot of creative options there. We just need to make sure they have access to tap into one of those categories, okay? Now, like Alan had talked about, partnering with the loan officer, whoever's helping out your client, you want to be able to decipher things that they're giving to you as far as information, really around 2 categories. If you're getting a loan denial or if you're getting a loan delay, you need to be able to proactively ask these questions to get it faster through the process, because you can't assume that they're going to take all of the necessary time and devote that energy, right, to a different file unless you're proactively kind of probing through the questions, and maybe bringing up these ideas will actually help save the deal, because we're all human and sometimes there are things that slip through our minds, just like on y'all's side. And so helping us out definitely goes a long way. All right. So the first category, as we're going through these, please, if you can, jot down some notes, or I'll follow it up with an email so we can have those for you. But let's say that you get a call from a lender and they're saying, hey, we're going into a denial stage because your client added additional financing, right? They went out and they bought that car that we've all joked about, or they've put an extra $5,000 on their credit card, and now we can't move forward on their financing. The first question that you need to ask them is very simple. Can they pay it off, right? If they took out a $10,000 car note, but they go and turn around and pay it off completely, it washes it clean, right? It wouldn't be an issue. And it's such a simple question that it's the number 1 thing that gets overlooked. The second question is, let's say they don't have the assets to pay off that vehicle. Can they pay something else with a lesser balance, but an equal payment, right? So when you look at fixed installment loans, student loans, mortgages, vehicle loans, the payment's fixed, right? But the term and the balance gradually go down to eventually where it's zeroed out. So what that means is that if you only owe $1,000 on another vehicle loan and your payment's $200, and that's how much we need to free up so that way you can qualify. Well, instead of them writing a $10,000 check for that new vehicle, if they just write a $1,000 check, they actually bring their debt to income back to where it was. So I hope I'm explaining that well and clear. Yes? All right, so very good. So ask if there's something else they can pay off that would be helpful. The third question is, oh, well, now their debt to income is exceeding the limits. Is there another program that they can utilize that will allow for a higher debt to income ratio? Okay, so if you're going to write down 4 programs in order as far as who is the most strict and how much home you can buy and who's the most lenient, here's the order. USDA lets you buy the least amount of house for your usable income, right? They're capped at around 41%. In some cases, they'll let you go up to 45%, but that's it. And when you look at an income and a mortgage, that's a pretty low number. The second most lenient program out there is going to be the conventional loan, and they'll let you go up to 50%. And then from there, we go to the FHA loan, Federal Housing Administration, a lot more lenient. They'll go up to 55% of your income. And then the last and most lenient at all, in case people have not asked their clients if they're veterans, is the VA loan. Because the VA loan will let people go upwards of 70% of their income as far as qualifying for a mortgage and all of the other expenses that they're tagging along, right? So if you're starting with either a USDA or conventional loan, ask your loan officer, hey, we have these issues, let's just move to a more flexible program, right? The second thing that typically becomes an issue when it circles around credit is that, well, we're in the process, they're under contract, and all of a sudden this collection popped up, right? Whether it's medical or, you know, a broken lease or whatever it is, it always ends up chasing people down before they close on the house. So if they have a collection or a late payment pop up, the questions that need to be brought up is, one, is their score still qualifying? Okay, if you have a medical collection, that's not going to keep you from buying a house. On the lending side, we understand very clearly, and I've experienced it personally, life happens, right? If you've ever had a kid and you get 100 different medical bills, you can't guarantee you're going to pay all of those, because most of them, honestly, I don't believe that I owe. And so if something pops up on my past, the bank's going to be like, that's okay, you can still buy a house. So one, is their score still qualifying? The second question to ask is, can they pay the collection off at closing? So if it is not medical in nature and it is becoming an issue before they can close on the house, we'll just set a file up to where they can pay that collection off at closing. You should still be able to fund and close on that loan, okay? So make sure you proactively ask the lender that. The last question is the late payment a one-time occurrence? If you have a very squeaky clean file and then somebody just accidentally misses something because they're distracted buying the house, they miss a more auto payment and it tanks their score just a little bit, ask them if it's a one-time occurrence, because maybe they just need to run it through a different system, okay? So this is slightly more advanced, but as you guys are going through the process, on the lender side, there's 3 ways that we approve a loan for the final approval. You can either manually underwrite it, which is very old-fashioned, and that's when I actually just look at the file. We go through everything with a fine-tooth comb and say, are they a good candidate for a mortgage? But more popularly, we go through 2 automated systems, which are called DU and LP. Okay. Now, just like the 4 programs, USDA, conventional, FHA, as it becomes more lenient, there's more leniency on the automated systems too. So if you're getting an issue with the DU file, ask your lender, can you switch it to a different program? Can you run it through a different way? Can you go LP? Can you go manual? Can you do something else that's going to look at it from a different angle? And if you're asking the question, is this a one-time occurrence? That's a very good indicator that switching that program can definitely be the deal saver and allow you to move forward, okay? The second thing that comes up as an issue is now centered around income, right? So let's say you're in process and you get a call from the lender and it says, hey, you know, due to COVID-related stuff, the employer has cut your client's hours, their income is trending down, right? That could be a really big issue. Now, typically, and what I've experienced is when it's a COVID-related hourly cut, they do it as a percentage. And so your client went from, let's say, 100% pay to 80% of their standard pay, right, or 70%, but it ends up kind of capping at that 80 or 70%. It's not going to continue to go down below that. So typically when a lender is saying, hey, their income trended down, ask them if it's stabilized, and then 2, ask them if there's other things you can do to increase their usable income. Now, a note to put down on this side is an MCC credit. I think I've done a class many, many years ago on that for you guys, but MCC stands for Mortgage Credit Certificate. And essentially, it's a tax credit the government gives, but when we use it as a lender, I can add that to pump up their income just a little bit, okay? The last thing, if you really go through all of the options, the income's trended down, you're already under contract, you can still add a co-borrower, right? You don't have to do that before you go under contract. Explore those options. Are there family members who can help jump on this loan and save the day? Is there an aunt or an uncle or somebody who just loves them that would want to help them out? Bring them in. And you can always set things up to where they get themselves removed 1 or 2 or 3 years down the road whenever things do stabilize for the borrower, okay? Secondly, regarding income, you hear things like job transfer. They recently transferred jobs, or your client's actually been fired from your job. Typically, that's a really big issue. And I've actually experienced this once in my life where somebody lost the job at the beginning of the process, but they found a job a week later, and it was in the same line of work with the same pay, and they were able to do it, right? So it's definitely a tricky situation case by case, but the questions you need to ask is, one, are they in the same line of work as they were on this current job? If they are, that's a really good indicator. You should be able to find a route to go. And then 2, did they have a gap on that income of more than 6 months? If they did, you shouldn't have been shopping with that client anyway, right? But if it's less than that and they've already found another position of equal pay, again, you should have a green light to move forward by either adjusting the programs or adjusting the way that they're approving the loan. Third category, let's run through, which is assets, right? They spent all their money for the down payment. So when I met with the Joneses, they had $10,000 they were using for this, and then they got the car bug, and they went and they wrote a $10,000 check for a car, so they don't have any more money. So the next question you need to ask proactively for the lender is, can they get a gift, right? Can they talk with a family member who can help make up that $10,000 deficit? Can that favorite aunt or uncle who doesn't need to co-sign, maybe they can just help out with a little bit of cash. The second thing is, well, how quickly can they save it, right? Because if somebody just calls ahead of the schedule and they say, hey, they spent all of their assets, but you have a borrower who's putting $5,000 away every single month in savings, you're going to make that up very, very quickly, right? So don't let them pull the deal out. Maybe it just needs to be extended a couple weeks to allow your client to get that extra paycheck or two. And then all of a sudden now you have all of the assets that you need. And the last question is, this assets that you're looking for, are they being used for reserves or are they being used for down payment, right? If somebody is doing the traditional mortgage route, they're putting their own money for the down payment. So let's say they spend all of that. Well, remember, you can still look at either a gift from family or you can look for a down payment assistance program. If the program is asking for reserves, which is additional monies aside from their down payment, well, now you need to look at different loan programs to underwrite the file. Because if you get a less picky program, it's not going to ask you for the reserves on that client, right? So explore these routes with your loan officer as you're getting told those answers. The last thing you might hear is that funds are not usable, okay? And Alan and Anna, you guys can unmute for this, but are you allowed to use cash funds for your earnest money check? Can you take $1,000 to the title company?
Oh, you cannot.
Okay, and the reason for that, thank you guys for the correct answer, you guys have a great broker, is because we have to be able to track those funds in order to show credit for them, right? So Abby, if you have a client that comes to you and says, hey, look, my cousin, I don't have $1,000 for my earnest money, my cousin's gonna give me $1,000 and then I'll write the check, we'll figure out the rest down the road. Well, we can't do that because now I have to technically give the cousin credit for that earnest money. I can't give the borrower credit, right? So it kind of unwinds things if you do it backwards. So ask if it was a cash deposit. If so, how much? The second thing is if it is cash, so let's say they do actually end up writing a check or bring a cashier's check in or something that we can't source the funds, ask them if it's because they sold something. So sometimes people will say, oh, I have this old vehicle, I'm gonna sell it for $1,000, take that $1,000 and there's my earnest money. That's perfectly fine as long as we can prove the sale, right? If we can't source the money, we can't use the money. And the last thing is, how long ago was the deposit? So if you're having issues and they're saying that, hey, we can't use these funds, they've only been in the account for a month and a half, well, that doesn't seem like an issue if it's early on in the process. So again, you can say, let's just wait until they hit that 2-month seasoning period, update their assets, and then we'll be able to move forward. If you get to an issue with a lender who's not willing to help you get creative on those options, well, then you can say, hey, I know I'm gonna hit that 2-month seasoning period. Maybe we just need to switch teams, right? Move it over to someone who, when I get them with that team, now we're on the right amount of bank statements and we don't have a seasoning issue, okay? So hopefully those are helpful in those 3 categories. The next topic is now your loan is being delayed, right? So if it's not being denied, it's being delayed. It's always one of the two. Lenders are always dropping the ball. The first reason that loans are being delayed is because of appraisals, right? So some proactive questions you can ask them is, are you ordering the appraisal as soon as you get disclosures, or are you going to wait until we're out of the option period before you order the appraisal? If you asked us 3 years ago, it's perfectly fine for us to wait until you're out of option because there's a plethora of appraisers and there wasn't too many deals that were going on. Now it's completely changed. If we wait 10 days, or in some of you guys are putting 15-day option periods, that's half of the contract. There's not time for us to wait and then order the appraisal and still keep the loan on time. So proactively ask your lender, can you do it once we have the disclosures back? Now, again, this is a little bit more advanced, but the number one issue that I hear back is, well, I don't want to risk that client's money because we're still negotiating repairs. So a catch that lenders can do is they can order the appraisal, but they can post date the inspection. Okay, so what that means is on day 3, we have the disclosures back. You have 7 days left before the option period expires. Excuse me. We'll order the appraisal and we'll say, hey, on day 11, I want you to physically go to the property. That way it's already in the queue and it's proactively working. We're not starting from scratch on day 11. And also, if you terminate during that option period, the appraiser hasn't done work to the house. He hasn't physically seen it, so you don't owe him any money, right? So ask them to get the deal in the queue so that way it's moving and in process. And the second thing to ask is, can you go to a different management company? Now, appraisals is definitely a conversation as far as what they're looking for to have with an appraiser. But if you're getting told that it's going to take 4 weeks to get an appraiser out to your little country sale house that you're doing, ask them if there's another management company, maybe that's local to that area, that can do it in a time frame that works for you and your clients. Okay. And most people kind of get set in their ways and they just use the same management company, so they don't think about asking other management companies, but there's always other options out there for you. Okay. The next thing is that your loan was not submitted to underwriting in time. Underwriters are humans too. And I love our underwriters. They do an amazing job for us. So I'm not going to say anything bad about them. They are the final say so on the loan. So as much as I love your client and we want to help them get them a loan, if my underwriter says, Donnie, you've missed A, B, and C, and for these reasons we're out, we can't do anything, right? So if underwriting is very crucial to get there as quickly as you can to give your client that peace of mind. And there's 2 stages with underwriting. There's the initial submission, and then there's the final approval, okay? The initial submission, to quickly define that, just means that they've reviewed it and they're willing to approve your loan contingent upon A, B, and C, right? Verify this asset, verify this income, make sure this credit stays in line. That's an initial submission. The final approval is going to be at the end of the day, once you fulfill those conditions, if you can, then they'll say, we're ready to fund as long as this home appraises, okay? So really, as a realtor, you're looking for the lender to have that final approval, or you're looking for confirmation that those contingencies are simple and that they feel they're able to go ahead and get those completed, okay? Now, there's timeframes to look at when you're looking for the underwriter. You want to have that file initially submitted within 1 to 2 weeks of going under contract, okay? This allows the front end team enough time to get all of the documents to submit to the underwriter, so that way they don't have a laundry list of contingencies. Hopefully they have like just 2 or 3 conditions, okay? So 1 to 2 weeks. The second thing you're looking for is to make sure you have the final approval no later than 5 days before the closing on the transaction, okay? Now, sometimes there's things that hang this up. You're waiting for that gift to come through from the uncle. You're waiting for the appraisal to come in if they ordered it really late. But just ask 5 to 6 days before, are we going to get that CTC clear to close? And are we going to be on track for the funding of this loan? Okay. So from those guys, before we jump into the next process, questions, Alan, Anna?
Well, no, so far so good. You're touching base on a lot of the key points that we've honestly been going through. Some of our agents have hit those exact roadblocks, so you touching base on those has been perfect. So I think we're all ready to move on to the next phase and move on from there.
Perfect. All right. So I'm going to share a screen real quick. I think I have the ability to share a screen, do I? Oh, it says host has disabled my sharing.
Oh.
If worst case, so I can email it to you guys if y'all want to pull it up on your side.
Maybe. No.
Abby, have you done the transaction from start to finish yet?
Try that now.
I think you should be able to now.
Try it now.
Oh, I can't hear you, Abby.
Unmute.
Cool.
Can you hear me now?
I can hear you now.
Okay. No, not with the client. I have gone through halfway, but we couldn't finish negotiating on repairs, so we ended up falling through. But I have gone through the process personally and through my parents as well, helping them out.
Gotcha. Okay, so very cool. So if you have any scenarios that you want to just share with us at the end, like things that seemed vague, would love to go over all of that. So if you want to just start thinking about something in the back of your mind, I'd love to have an open dialogue on that. All right. So I just shared a screen with you guys. You should see this kind of like looking Loanopoly map. Is that viewable? Yep. Okay. Very cool. Well, this is exactly what I go over with my clients, and it's going to just, and I'll forward this to you guys so you can have it, but it visually shows you literally every step that's needed as far as getting an approval. Now, the first step is to get your clients pre-qualified / pre-approved, right? This is always where everybody sends them to the lender to have that introduction phone call to gather the basic information on those three categories, income, assets, and credit, to make sure that you are actually going in the right direction. Okay. Now, where most lenders kind of stop is right there on that online portion. The second step for my team, and this is where Legacy and myself start to stand out, is we're asking for all of the documentation up front. Now, I'll be very honest with you. If you can help tell your clients to give that to us, it helps tremendously. I ask for it, but the more we can get up front, the more it saves them stress at the end of the day, and also the more solid of an answer we can get for you. Alan, me and you just experienced this with the tax return, right? It was 3 or 4 weeks after I talked with the client, tax return comes up and it kind of changes the story. So there's definitely, you know, the more information we can get up front, the better. Once we have them qualified online, we've looked at their income and asset documents, that's when you truly have a pre-approval. If you don't gather documents, your client only has a pre-qualification, which is not as strong as an offer to place. And again, just be very aware that there's no way for a lender to give you more than a 70% confidence rate unless it's a pre-approval. Okay, there's just no way, because we're going off of their word as far as how much they make and how much they claim as deductions at the end of the year. So once we have all of that, I meet with your client in person to pre-approve them and actually kind of work backwards from the monthly payment they want to be at. And then we work into a sales price that you can cap your search at. So that way you don't have this uncomfortable, I found this beautiful $300,000 home, and your client's like, oh, that's amazing. I hope it's less than $500 per month. That doesn't make sense, right? So we're going to work backwards into the sales price based on what they want their monthly payments to be. Once you find a home and you agree on the terms with the seller, then you're technically under contract, and that's when we trigger your loan application. The first key point in this stage is going to be that we're sending them their initial disclosures. Okay. If the lender has not sent them disclosures, there's either you don't have a contract or they're holding off for some reason because they feel like the deal is going to fall through. But contractually, once you sign a contract, we need to trigger the disclosures. Your client should have everything in writing as far as the loan terms, the fees associated with buying the house, and the monthly payments. They need to have all of this information up front. Once they have those disclosures signed, that's when we go to our contract to close department. So for us, this is a combination of two people. It's myself and Xavier. Every Tuesday, we're going to send clients weekly updates as we're gathering all of their needs list to let them know where they're at in the process. Okay. Along that introductory stage, we're going to be asking for permission to order the appraisal, right? If you guys finalize the negotiations on the repairs 2 days into the contract and you're good for us to go full bore and order the appraisal, then we're going to go ahead and do that. If you tell us to hold off and wait till the end of the option period, that's when we have that flexibility as far as schedule the inspection, but post date it to where it's outside of the period where your client would risk any of their money. The second thing that's being taken care of simultaneously is separate from Legacy, but it's going to be clearing the title for that property. Okay. Now, clearing title work is generally started before the sale actually goes under contract. Lately, it's been changed a little bit because if you've noticed, the home comes up for listing and then the very next day it's under contract. There's not enough time for the title company to really do all of their due diligence. So make sure that this title process gets started early, because you don't want to find out that there's 17 different owners and 3 of them are in prison. You're not going to be able to close even if you want to, right? So make sure title work gets started in a timely manner. From there, we're going to go through what's called processing and underwriting. Now, these 2 stages, I really consolidate because they're essentially the same thing. My processor, Yachty, puts everything in a nice, neat order. So that way, when she submits it to the underwriter, again, there's as few questions as possible. And when we have that initial approval, we're only getting things that we know confidently we should be able to get. Okay, so when we get to that stage, we're looking for a clear to close. Once we have that from the underwriter, we send documents to the title company, and then that's where your client signs and ends up getting keys. Now, process-wise, from start to finish is anywhere between 21 and 45 days, okay? Now, as you're negotiating, most clients are just gonna say, well, yeah, let's put 21 days on there. That's super quick and convenient, and it makes my offer stand out. What your clients need to be aware of is that that puts all of the pressure on them, okay? My team can absolutely do 21 days. I can do less, but that requires clients to get me documents in less than 8 hours from when I request them. So if they're not able to do that, well, then they're ruining their 21-day closing. So ask them, are you comfortable in working that quickly? If not, then let's maybe put a little bit more time on the contract to give you time to comfortably get through this process so you're not completely stressed out of your mind. And so that's kind of the process in a nutshell from A to Z, all right? So in all, that kind of circles back on everything I was planning on going over. Alan or Abby, is there anything specific that y'all would like to cover?
No, I mean, that was very informative. I love the troubleshooting that you went through, the whole process start to finish. The only other thing that I can think about for my agents and what they would do is, I guess, their main question is, what do I send to the lender and what do I not send to the lender? So what is something that an agent mistakenly can send to you guys and now have to open up a can of worms?
Yeah, the inspection.
Okay.
So if you guys get inspectors strategically are going to give you a list of anything and everything that's wrong with the home. On the lending side, we want to make sure that we're lending money on a structurally sound property that's not going to electrocute or collapse on our clients, right? Because that's a huge lawsuit. And so if you send us the inspection report, well, now we can't unsee that he thinks there could possibly be roof issues or he thinks there could possibly be foundation issues. And that becomes a real issue when we're trying to finalize the lending of the money. So always keep the inspection to yourself, read through it, ask Alan for, his input on those things as far as if you should move forward on the property or not. But don't ever send that to the lending side. The second thing is when you guys start negotiating items outside of the actual property, right? So, the portable playground that's in the backyard or the TV that's not even mounted to the wall, that's just kind of freestanding. Having those items negotiated is fine, but those need to be done on something separate from the purchase agreement. And the reason for that is when we're appraising the property, I'm not going to factor in the Samsung TV, right? We're trying to actually get just things that are physically on the house. And so that's why those become an issue. Oh, and also the things that some people don't send to us that are an issue is contracts. So I've had this a few times over the years where I get a contract and it's like, oh my goodness, this thing was dated, what month are we in? It was dated from July 15th. Why am I getting it on August 3rd, right? We're closing in 15 days. So, as soon as you get it, the way I ask for it is if you've heard a verbal yes on the offer, send me the offer that you submitted. Because one, you've already kind of had it semi-accepted. I'm not going to trigger the disclosures, but we can start proactively setting it up. And then also, if you don't ever send me a signed contract, at least it's on my side to where I can continue reminding you so that way we can get it. But as soon as you have an offer, before it's even receipted at the title company, send it to your lender so they can just proactively get started.
Awesome. Well, that was pretty much the answer I was looking for. I just wanted to make sure that it came from the lender's mouth, because I tell my agents that quite often, you don't want to send that because there's going to just be more reasons to not fund your loan, which we don't want. But other than that, Abby, do you have any questions while we have you on?
No, not at this time.
Okay, cool. Well, I think you covered everything, Dani.
That was really helpful.
As always, I always appreciate you. I have to take you out to lunch. Hopefully see you all again soon.
Do it. Maybe cover 3 will be open when we go.
Yeah, this time, right? But that sounds good. Well, I thank you so much. You guys have a good rest of your day, and then we'll touch base a little bit later, Dani.
Awesome. Sounds good. Take care, guys.
Okay.
Thanks so much.
Bye.